I have seen some demos of what this can do, and it's, wow, finally, this is a blockchain that actually behaves like a world computer.
What's up, everyone? James here, and welcome to a brand new episode because we have our very own CEO, Josh Tobkin, with us, and he has a whole bunch of alpha for us as we head into 2025. Welcome, Josh, to the show.
Great to be here, James.
Josh, I want to ask a quick intro before we get into this. A lot of people that watch love to know the origin stories, and some people obviously have heard it through X Spaces and other podcasts you've been on. But for those that haven't, just a quick breakdown of how Supra started. Where did the initial dream arise?
Wow, I mean, the original like kernels of the idea started back in 2017 in San Francisco. So already back then, I had been learned about Ethereum. I've known about Bitcoin for years before that, but I had learned about Ethereum, and I'll be honest, I had thought that this would never work. My background, well, I didn't think it'd be useful because it's so slow. My background was with SaaS and software as a service, where we're really focused on performance, fast experience, great user experience, and we try to make sure every component from the UX all the way to saving it in your database is extremely fast and smooth. And Ethereum to me just seemed like a very slow, inefficient database. So I was like, I'm not entirely sure why this is going to be very valuable. Smart contracts sounded pretty cool. I couldn't really understand where the value is going to be from. That said, one friend, she told me that she had made an investment into Ethereum and it has gone up a lot. And that did get my attention. And she urged me to look into this again. And that's when I realized actually there is a trust problem in the world, that there are a lot of intermediaries and middlemen. And part of that was when I reflected upon my first startup that I sold to my partner maybe 5 years before that. It was in the online poker space where we were doing cashback, and we were probably like maybe the top 10 largest growing rakeback, it's called rakeback programs out there. And I used to complain to my co-founder at the time that something seems off because our player growth is increasing, but the revenue is plateauing and not matching that player growth. So that was a very big wake up call when I connected the dots, because I used to complain that these poker rooms are ripping us off, but we had no other recourse. We had to take the data that they gave us. And once I started connecting the dots there, I realized this can be applied to many other things: supply chains, decentralized finance. It wasn't really a big thing just yet. It was clear that so it was a new way to operate on the web. And as they call it, the like web of value, right? So that was the beginning of the kind of journey. I put the SaaS product on autopilot. It exists today. It has clients today still. I have not put in any work into it, not even like an hour in the last several years. So that also is a really good lesson for me to understand the power of product market fit. So I put that onto automation, and I have people working on that still, small team. Nonetheless, that gave me the opportunity to go all into blockchain. So I've dedicated between basically almost my entire waking life towards this. I did have some small side gigs here and there, consulting here and there, but I went all into blockchain. Read a bunch of white papers, really tedious. And this is before there's AI ChatGPT, so you actually had to read it. And was really just trying to understand how to scale Ethereum. And it was really much the Ethereum focus at the time. And for me, the idea was, what if it just occurred to me, like just a stroke of inspiration, that what if we could randomize the nodes into smaller subsets? So I came up with this idea of a tribes and clans architecture. And the next challenge was, how do I randomize the nodes? I need to get on-chain randomness, but blockchains are deterministic systems, right? So how do we solve that? My idea was very naive, but it was basically to get oracles to bring in things like stock prices, weather data, things from what's called chaotic systems or chaos theory, get that information to the blockchain, combine them into with each other in unpredictable manners, and say that's the randomness seed. My research into bringing on-chain randomness ultimately led towards having the intuition that blockchain should also have oracles. Smart contract platforms can do so much more with oracles. But ultimately that research also did lead me towards understanding cryptography more deeper. And I came across something called threshold signatures, which is actually what we are doing today to have on-chain randomness. These are in development, and we have very novel new types of distributed key generation protocols, DKG protocols, which are the precursor to threshold signatures. So these are actually getting published to some top academic venues, and it's very efficient compared to what was being done in 2017. But yeah, so that was the origin story, more or less, that blockchain should have randomness, should have oracles. This tribes and clans architecture was this randomization to have subcommittees called clans to do different compute work. That was the inspiration, but that was barely the beginning. And to be completely frank, in late 2017, I didn't really know what I was doing. And it took a long time for us to a lot of research, a lot of collaborations with great academics and researchers to bring Supra to where it is today.
I think that's exactly what is required. You can have the inspiration, and then it's a dream team to come together to start putting it all together. I love that, a stroke of inspiration. That stroke of inspiration is what I was looking for. That's the moment where you started to realize what is possible here with this technology. You mentioned also their waking life. I'm really curious, back then compared to now, what is your waking life like in terms of hours? Wake up time to when you put your head on your bed?
Okay. Typical day for me is these days, at least, it's waking up around 8 a.m. I usually tend to like to wake up earlier, but been working late with our international team. So let's just say my most intense days are Mondays, Tuesdays, and Thursdays because we have research calls from my meetings start from 9:30 p.m. all the way to usually 12 midnight. And then it still takes me another hour or so to get to sleep after that. But during between that, so let's just say my day starts 8 a.m. Try to drink some water. I've been trying to drink water with baking soda of all things. It's supposed to help your body be more alkaline. So this is a new thing I started to do. And then I'll try to refrain from coffee for at least 30 minutes or so, let my body adjust. If I can, I try to get some sunlight into my eyes, just get the, ball rolling. And by then, usually we're approaching 9 a.m. with the first calls. 8:30 or 9 a.m. is usually where the first calls happen, first meetings. We are a remote organization mostly. Some folks do have offices around the world, so, small ones or co-working spaces. I tend to work out of my apartment. I live here with 2 cats, so I make sure I feed them as well. And day begins usually by lunchtime. I will take a maybe 3 times a week. I will, try to get some workout in, so lifting weights or some form of cardio. That's usually about an hour, another 30 minutes to shower up and continue. Let's get that out of the way though. So several meetings in the morning, sketch out some ideas while it's still fresh and revisit other ideas that are pending. So it's administrative, but I do like to have some time to work on and sketch out some new ideas that are, yeah, I have learned that it's so important to go from something that's in your mind to on paper. It's a very important next step. And then at least document it so you don't forget about it. That's one. After the workout, after the gym, it's back to work. Let's call it around 1:30 or so. I'm usually eating my lunch during the next meeting. And it depends that there's always some fire to put out or just some situation to deal with. Or there's various research kind of initiatives that we're running. And I have meetings with different people from different parts of the world. Usually during the afternoon with meetings with the teammates that are in Asia, towards late afternoon or meetings with teammates in Europe. Then in the evening, I usually wind down around 6. From 6 to around 8:30 is my free time, and I can do whatever I want, maybe hang out with some folks, go out to eat. And then I would say about till about 9 o'clock. But around 9 o'clock, sometimes 9:30, I'm already plugged in again. And then that'll go on for another 3 or 4 hours, depending on the agenda for the week. Wednesdays are a little bit easier. It's a little bit unsustainable to do that 5 times a week. That is my general schedule, Monday, Tuesday, Thursday. The good thing is, yes, it's exhausting and I don't really have much of a life sometimes, but I actually really enjoy the work. And it's so fun because one of the most thrilling things is to go from idea, breaking it down to its individual steps, especially when they're complex, and to get agreement upon it, make a plan and execute upon the plan and constantly iterate. So more or less, I view everything we do at Supra as products. Algorithms are products, consensus algorithms, Oracle protocol. All the protocols are products. Even the cryptography behind it are products. Our front end, website, wallet, Explorer. We're even getting into very interesting things related to AI. Everything's a product. And I try to make sure our team has that product mentality. This podcast is a product, right? The work that you do is a product. And there's several different teams that are running different initiatives. It really does take a team to do what we do at Supra. So while it's intense and it's been like this, I've been having these midnight calls for 4 years straight. I rarely miss them. It's the only reason why I have that kind of motivation is because it's actually fun. It's actually exciting.
That's the key, is to actually enjoy what you're doing. And that is very intense. We're looking at 18-hour days. There's no two ways about the fact that the fruits of your labor are starting to show now. Supra is on the map, third MoveVM L1s. It must be exciting to see the fruits of your labor, especially considering how much labor you've put in.
Oh yeah, no, it's wonderful to see it and also just knowing what's coming. For example, cross-chain communication protocol that doesn't rely on a traditional bridge, that's on DevNet and then in a prototype form, but it's been worked on for about 2 years. It's actually more than prototype actually. It's almost ready for testnet. So testnet, the progression is usually DevNet, testnet, then mainnet. That's very soon. Our on-chain automation server is similar thing. It's already on DevNet, about to go to testnet and then mainnet after that. And when I already know in my mind's eye, when you have a layer one with Oracle price feeds, which we already have, and also you add to it cross-chain communication and automation. This is a type of stack that can do things that no other blockchain can do. And we'll be the first to do this as well. Not to mention, Supra is a multi-VM architecture and system. So we will be supporting the EVM, and EVM is also on DevNet, or will be more matured and with some upgrades very soon, though. Like we're talking about in a week. So there's a lot of major product upgrades coming and more to come later. So it's really cool because I have seen some demos of what this can do. And it's wow, finally, this is a blockchain that actually behaves like a world computer. We talk about world computers, but blockchains don't communicate with the outside world. You need oracles for that. We talk about a world computer, but they don't speak to other blockchains. You need cross-chain communication for that. And these things don't all natively have automation. Us bringing these components together in a very unique architecture with wonderful algorithms, it's going to, in my opinion, create a lot of value for developers and then ultimately for the end consumer.
No two ways about that. You have mentioned, in essence, the scope of what Supra offers and will offer. This is a question that we ask everyone on this podcast. It requires a little bit of creative thinking right here. But if you had to explain Supra's value proposition using only three emoji, what would those emoji be?
Wow. Okay. It would be the kind of probably the first one would be a rocket ship. The second one would probably be mind blown, the mind blowing up. And the last one is either the nerdy one with glasses or the emoji with sunglasses.
No one's actually ever, those last two, everyone throws in the rocket ship, but no one's actually given us the mind blown and the glasses guy, or I actually like that, the cool guys. One speaks to the work that we're doing, the other speaks to what the consumers are interested in. So I really like that. All right. So, Josh, right now I want to get into the crux of why we're having you on. Supra is revolutionizing DeFi. We're talking about DeFi Revolution. You've actually said on a number of internal calls, you've actually said it publicly as well, that DeFi is broken. What are the biggest problems that no one's talking about? And why has DeFi been stuck with these issues for so long?
Sure. First of all, these are very difficult problems to solve. And some people may have argued that they're unsolvable. In particular, rather, that's in relation to MEV, minor extractable value or maximally extractable value. What that is usually when transactions are ordered by the validator node in a particular manner where it benefits them. Maybe they see a transaction that someone has set the slippage pretty high, and the slippage should only be meant for, I'm trying to do this and only in worst case, go ahead and use the slippage. But otherwise, I prefer not to do that because you'll have worse execution ultimately, right? Now, MEV is very common in the form of front running, sandwich attacks, transaction ordering, preferring other transactions over yours. And that leads to strange incentives because these types of transactions can allow the node operator to basically buy the asset and sell it back to you at a higher price and make a margin on the difference, which is not great. That's not what you intend to do, a certain type of behavior. You don't get the execution you expect. Also, a lot of folks, there's something called liquidations, and often these liquidations have fee associated with them. And that fee can be lucrative. Sometimes it's 1% of the total position. So 1% of a large position can add up into thousands of dollars, right? And that is node operators are maybe colluding with other parties to trigger that liquidation and try to do some rev share between them. So this has traditionally been seen as a negative form of MEV or toxic MEV. But they also say that there's good MEV. One is you want to have timely liquidations, sure. You also want to have arbitrage occurred so that DeFi is balanced. And those are still called, they call that good MEV, but it's still MEV is my point of view. So this is happening, it's very rampant on the large chains like Ethereum and Solana. And users are being fleeced. frankly. They're not getting the best execution. Sometimes these node operators are earning so much extra in fees. It's a little bit, let's just put it this way, this creates some strange incentives at the expense of the end consumer. I believe that end consumers are not going to continue to tolerate that for much longer. These types of behavior in traditional markets are actually, I believe they're illegal. I think some of these folks are, their mentality might be until it's illegal, we're just going to keep on doing it, which I guess is a rational point of view to some degree. But we're here to make DeFi better. We think that this is transformative technology. We think that what we're doing at Supra and just blockchain in general is important for the world, and that we shouldn't be preying on our end consumers. So we have strategies to mitigate that, and they're actually very creative ones. And yeah, we're excited to talk about that today.
Yeah, one of those strategies is randomized execution. It's actually quite a crazy concept for maximum extractable value protection. Can you break down exactly how Supra is doing this and why it's impossible to game the system?
Yeah, so I want to be very clear that we call this MEV resistance, not 100% foolproof, but we think that this is going to be a very good step forward. As mentioned, Supra utilizes threshold signatures, BLS threshold signatures, and the output of that signature on the block, for example, can be utilized as a randomized seed. The output, what's really amazing about these threshold signatures are that, for one, they can be compacted into a single signature. You can take many signatures and compact them into a single signature. That's really amazing. Number two is that the output of that signature is always going to be the same as long as the threshold of participants is met. Let's say the threshold is 67% of the nodes. It's any combination of 67, you'll still have the same output. And the last attribute about this, which is amazing, is that the output is unpredictable as long as there's a single honest actor within that threshold. So, which is a very reasonable assumption to have just one honest actor out of 67 participants. And the output is completely unpredictable, and it's fast, and it's relatively cheap to verify. So this basically gives us free randomness. So we can utilize the threshold signature on our block as the randomness seed in which to decide how to execute the transactions in the block at a randomized order, so unpredictable order. So why is this important? It means that as a node operator, you're not going to be able to just say, okay, I see an opportunity. I'm going to put my transaction there. You might be able to try to do grinding, but you'll have a very small window to grind on that. We're talking about Supra finalizes and commits blocks in 300 milliseconds, not block production, finalizes consensus. And that's very fast. So the opportunity to cheat is very low. And by randomization, you can't predict the ordering of the transactions. And while it's random, it's also deterministic, meaning everyone has to execute in the same manner, but it's in an unpredictable manner. Now, that said, the kind of astute observer or the kind of MEV strategist might say, what I'm going to do is I'm going to spam the block with a bunch of transactions so I can increase the probability of my transaction landing where I want it to be, maybe right behind an Oracle update or between maybe I'm racing to trigger this liquidation or whatever it might be. The strategy would be to spam the block to increase your probability of landing it where you want. So to combat that strategy, we have to introduce a second component, which is localized fee markets. Solana's the first to pioneer this idea of localized fee markets. It's a good idea. And what we do with this is that if you are trying to spam the block or others are also trying to race to have that to trigger the same state or access the same states in the blockchain, it just gets exponentially more expensive. So it's not worth it to spam. That's the goal there. So randomized execution coupled with localized fee markets, we think is the best in breed MEV resistance strategy out there. There's a lot more research required to see how this is going to unfold. We're still in the process of implementing it, but we have a very clear path to get there. And to my knowledge, this is something that myself and others on our team have been looking into what are the best MEV resistance approaches while simultaneously being low latency. So this whole thing doesn't really add any additional hops or execution beyond just normal execution. So it's not slower. So this, to our knowledge, is the best mitigation strategy while not disrupting the transaction's speed.
A big thing about Supra is automation, and part of the DeFi revolution is the introduction of auto liquidations, auto arbitrage. Let's talk a little bit about these introductions here. I want to talk about auto liquidations real quick. Manual liquidations are messy, of course, they are slow, can cause cascading failures. With Supra's automated approach, Do you think this means the end of bad debt and liquidation wars?
I think these ideas can make Supra the best place to have execution in DeFi. This is truly a very innovative approach. Layer one smart contract platform with native price feeds. And imagine Supra prioritizes the Oracle data. So the Oracle data always lands. Just so you guys know, in other chains, Oracle data may not land in the block and therefore you may not update. If there's too much congestion, that update from the Oracle may not land. But in Supra, since we have native Oracle, we can prioritize it. We aim to have Oracle data land in every single block. That's one. Now, layer one with Oracle, cool. Automation. You add in automation to the mix. Now you can do things in a very interesting manner. So we call this zero block delay automation. Okay. What I mean by that is at the execution of every single block, we have a certain amount of execution space that's reserved for automation tasks that are registered in advance. Now we can also have system level automation tasks. Now, what's really remarkable about this is that every single block, and suppose every block is run committed on the order of 300 milliseconds. So let's just say 2 or 3 blocks per second. We also be running the automation at the end of the block. This automation is something that every single node runs. So there's no stage starting or anything. Everyone knows what to do here. We don't have to communicate on who's going to do what. We just know what to do. And it's basically a constant cron job to run a bunch of scripts that are pre-registered. And the system itself can have its own pre-registered scripts that are governance controlled. One of which we have realized is the idea of automated liquidations. At the end of every block, if there's a position that is underwater or the price according to the Oracle price feed has been met and the position is no longer valid, the system itself, if it hasn't been triggered by some other external liquidation, someone else taking the opportunity, Super's automation at the end of the block will handle it. It'll simultaneously, perhaps the system will take a flash loan from the decentralized treasury. So this is another concept we should cover. This idea of a network owned liquidity. It's like a decentralized pool of assets that the system controls. It's like a decentralized bank for the Supra ecosystem, which will be governance controlled over time. So imagine during auto liquidations, at the end of the block, the system does a flash loan from the network owned liquidity treasury, fills the position, the liquidation position, and also can offload the difference to a DEX in a single transaction. So it can keep the system solvent on a block to block basis. Moreover, what's really amazing about this is that liquidation fee I mentioned, it's sometimes 1%. That can become a revenue source for the network. Also, to take this further, what we hope to do is let's just suppose we say 50% goes to the decentralized treasury, 25% goes to the dApp in which this liquidation occurred, becoming a new revenue stream for the dApp, by the way. They don't necessarily collect that fee. And also the other 25% to node operators that execute the liquidation. So these become new revenue streams for the treasury, to the dApp, to the node operator, and also keeps Supra DeFi more solvent and balanced. And these underwater positions won't occur. To my knowledge, we're the first to do this. And what I'm about to share is not guaranteed, but I'll tell you the team has been discussing the following. If we are able to accumulate a sizable treasury, we could also technically, this will have to be the group foundation and governance decision, we could do buybacks. So we can be building up the treasury and then buying back the super token, which is really popular right now. These protocols, folks like it because it reduces the circulating supply. So things like this are possible. Other things that are possible is, let's suppose that we build a sizable treasury over time, and that treasury can be utilized for ecosystem growth or other initiatives. Bottom line is we don't have to always rely on block rewards in the long run. Maybe we need to incentivize block producers and the validators more than the block rewards have. By building up this treasury, we can just have a constant stream of revenue for the system. And I'm really inspired by the idea that ultimately this thing would be completely decentralized control. And therefore, you have a reason, like through governance, right? You have a reason to participate in decentralized governance because there's actually something that you can influence that might be quite sizable. I have no idea how big it could get, but I think it could get very large. So that's really exciting about that in terms of auto liquidations and new types of revenue streams.
I want to continue with topic of automation, but you brought up the treasury. So let me just ask this real quick. The network owned liquidity, it's a concept that sounds like a built in DeFi war chest. How does it work exactly, and what makes it different from traditional liquidity reserves?
Sure. So what we're thinking to do here is some folks have this idea of burning tokens, right? And I want to be clear that these are all not my decisions fully. It's a committee, it's a group, et cetera. Governance has controlled these types of decisions ultimately. But the idea that I've been promoting is the following. Instead of burning tokens for transaction fees, for liquidation fees, et cetera, we could introduce a new concept called freezing them in the treasury. So they're actually removed from circulating supply. Perhaps we could do that. It has the same effect as burning. It has the same effect as buybacks, frankly, for the duration of the time that those tokens are frozen. So let's suppose that they're frozen for 3 years. So during that 3 year period, those tokens are actually removed from circulation. This is a really interesting idea because it's basically showing through smart contracts that these funds were generated very transparently how and where they came from. It's in the treasury, but they cannot be unlocked for a certain period of time. And that period of time, like 3 years maybe, is a period in which those tokens are removed from circulation as if it's been burned. But this way, when we unlock them 3 years later, the system can grow. And the goal is to build something that's actually super sustainable. And also, super is a fixed supply asset. So instead of burning in, not like adjusting the supply as a result, by freezing it, you can actually continue to have a fixed supply. So that's a really interesting idea. I have not really seen, to my knowledge, other there have this idea of network owned liquidity. I've heard of protocols doing this, but not a network itself. So I think we're among the first to do this. But ultimately, I had a discussion not that long ago that in the future, suppose that treasury got so large, we could do things like buy a copy of the Constitution. We don't have to do only things on chain. We can do things in real life. We could say we're going to make a building in so country, whatever. It could be a super tower. I don't know. We'd have to get huge for that. But my point though is that by having a revenue stream for the network, for that will be controlled by the decentralized governance over time, we just open up a lot of doors for future potential decisions. And I think this is really important. It's a sustainable revenue stream through various tactics for transaction fees, sure. But automation liquidations, I think, are going to be a huge one. And also, there's a little bit more to talk about in this DeFi revolution. But ultimately, this idea behind Supra being the first their one to really put thought into a decentralized treasury for future growth. I think the goal is for us to not worry about struggle that Bitcoin's going through, which is there's not really enough transaction fees to replace block rewards. Right? And Bitcoin probably won't ever get there. But anyhow, that's a whole other conversation. I don't want to open up a can of worms there. But yeah, I think it's important for us to be thoughtful about how to just make Supra's ecosystem sustainable. Also, I should mention what's really cool about this is if we do have this network on liquidity, individuals could possibly be borrowing against that from a borrow lending protocol, maybe at a cheaper rate than peer to peer. Maybe we can enable flash loans that are actually also at a cheaper rate than you can get from Aave or whatever, other great protocols. But because this is network owned liquidity, that fee could be less. We don't have the need to max out the revenue for the individual participant. So this may lead to better deals or better rates for individual consumers. And a little bit far out there, but something that's really exciting is suppose Super also develops a robust reputation system that is provable on chain, very difficult to earn. Well, with that type of system, you could introduce under collateralized DeFi, borrowing from the network itself. Because you've proven over time to have been a good actor, contributing to the network, it wouldn't be worth it for you to burn all that goodwill just for a bad loan. Right now, DeFi is like primarily over collateralized, so it's not really a super efficient use of monies. Whereas if we are able to have some form of reputation system or on-chain credit score or whatnot, you could possibly do under collateralized loans, borrowing from the treasury itself. So it just opens up the doors for more things and that may have a significant impact.
So back to automation, we've spoken about auto liquidations, but auto arbitrage has been mentioned in this DeFi revolution position that Supra is crafting and proposing. It's a wild concept. Supra's automation actually takes over arbitrage instead of relying on external actors. How exactly does that work? And will it put traditional DeFi arbitrage traders out of business?
It won't put all arbitrage folks out of business for sure. Now, keep in mind that value is just going to an external party. It's not really being captured by the network itself. It's not necessarily being captured by the dApp in which the arbitrage opportunity emerged. in order to node operators. So it's completely third party external. That's where those opportunities, it's usually at like high frequency trading firms. It's very much the elite, not the average retail person anyways. So yes, they can also seek those opportunities, but the way that the auto arbitrage works is that once again, at the end of every single block on a system level, we can effectively check for imbalances across different DeFi pools. Now, what's interesting is that, first of all, if we can do this on a very low latency basis, every single block, our DeFi should be very well balanced. And this is good for end consumers. You'll end up with tighter spreads and better execution ultimately. So execution quality is like the main North Star in what we're going for. MEV resistance, timely liquidations, tighter spreads, and the automation system is going to power this. Now, the way it works in practice is at the end of the block, we have system level automation and we will seek for opportunities in which there's imbalances. We may have to, in advance, program some specific order of dexes or opportunities to seek through to solve for these opportunities to run these certain types of system automation tasks in this particular order. But we also may have to, over time, tweak that approach. But suppose we have identified and refined it to the best of our ability, we only tweak it maybe every 3 months or something like this, maybe more often. At the end of every block, we have a very specific set of transactions that are executed in a particular order, which we believe will max out the arbitrage opportunity. And once again, since Supra has oracles, we also have on-chain dexes, etc. We can formulate notion of the ground truth. What is the actual value of these assets? And we can use that information to inform us on what are the opportunities for arbitrage. Now, we think that this basically the average, there will be opportunities for anyone to snipe an arbitrage opportunity, but anything that's remaining, like all the additional long tail, that's what we'll clean up with on a block to block basis. Now, we I suspect that Supra's automation system will take most of the arbitrage opportunities, but we redistribute it. So once again, maybe like 50% to the treasury that becomes decentralized governance controlled, 25% to the dApp, where this opportunity came from, once again, becoming a new revenue stream for the dApp that they don't otherwise get today. These dApps don't collect the liquidation fee or the arbitrage opportunities. And then the other 25% back to node operators, because we're trying to make it not profitable to just do MEV on Supra. But MEV is a significant revenue source. Why don't we do revenue share through this automation system? So it's better for DeFi, it's better for end consumers, it's better for node operators, and we also have decentralized treasury for this. So auto arbitrage and auto liquidations are going to be really interesting and new forms of revenue generation for the system at large.
So, staying on the topic of automation here, you're also going to be letting retail users create their own on chain trading strategies with no code automation. Are we about to see an army of degens running their own trading bots?
Yes. So the thing is, okay, so this is wild. So the combination, once again, the combinatorics are so expressive when you have layer one, Oracle, fast layer one, Oracle, smart contract platform, Oracle price feeds, as well as automation, right? Now, for the end consumer, what they can do is you can also create your own strategies. So as long as Supra has this information, such as your indicator, like a technical indicator that you're looking for example, you could say, do this if this RSI technical indicators hitting this threshold, or like buy back or sell or trade or whatever it is, or swap when some other like moving average is met. If we can get that data on chain, which we can through Oracle's price feeds, then as long as there's information on chain, including things like we're talking about really expanding the aperture here in terms of including things like interest rate cuts, Fed drop reports. And then if we can get that on chain and you can actually inform your automation strategy to do things based off of the outcome that comes later from like these other authorities. Now, these systems are basically going to be running constantly. They're like on-chain bots. We will check through our automation network at the end of every block. We'll check for the conditions if they're met or not. We think that this ultimately leads towards, yes, many folks creating their own on-chain strategies that are just constantly running, and you can also tweak them and you can make adjustments to them as well. Seeking out opportunities or things that just automating tasks for you. It could be as much as simple as I'm going to automate allowance for my kids. Like they get $20 every day. It just happens it retops up every day, 20 bucks per account. Or it could be as sophisticated as or as simple as if Bitcoin's price is 97,000 and Ether's price is under 2,500 And you can even add additional variables, like multiple variables that you're tracking for, multiple conditions, then buy more Supra or do this or that. Instead of just if Bitcoin is this, then do that, you can actually say this condition and also this technical indicator that do this. So these are like bots. Now, these things exist in the Web2 world on exchanges, but these exchange bots typically also don't have as much access to more variables like this, which we will be able to do. There's usually just more like technical indicators, trading bots on exchanges, as far as I can tell. But we are going to be getting more information, including like weather data, sports data, interest rate cuts, news events. We like there was a war, the war stops, or there's a fire, flood, or whatever. We are going to try to get other information onto our chain as well. And you can create conditional logic using this to automatically run. Now, it's really cool, and this is very strange, but also we think a huge opportunity for Supra is that these tasks are running constantly. We execute and check every block. So 2 or 3 times per second, these are checked. Now, if your condition isn't executed, then the check is the amount of gas, the Supra that is consumed is just a little bit, but nonetheless, it's still being consumed. So if you have thousands of automation tasks registered and they're all consuming for constantly being checked 2 or 3 times per second, there's actually a lot of gas consumption. We think there's a real possibility that this automation itself is going to be creating real on-chain transactions more than just organic transactions from just everyday people sending value back and forth because they're happening and being checked for a couple times per second. So we're really excited about that because no one else has this type of thing. And we think this is going to really increase, have a nice amount of constant on-chain transactions powered by the automation network. And once again, this is not something anyone else has. So we're finally doing something, bringing Web3 and DeFi to a new level that no one else has considered before.
In essence, what you're doing is you're envisioning here a fair DeFi ecosystem, and that's going to level the playing field for builders, users, degens. Can you speak into that a little bit about leveling the DeFi playing field?
Yeah, definitely. I guess also I should mention as part of that is we are trying to move towards a no code arena. So like the platform, for example, you just interact with the AI. Say, here's my intention. I suppose it can actually walk you through it and eventually it could get so sophisticated that it helps you create a strategy based off of your input. And it could eventually at some point actually help you run your strategy on historical data to see how you would have done. And you keep on doing this until you're happy with the result and then you deploy the on-chain strategy. Right now, like no code, drag and drop, conditional logic builders, these are talking directly through chat or voice even to AI will open up the developer experience to a lot more people. So you don't have to be a sophisticated engineer to do this. But we're really excited about that. That's part of being democratizing access to Web3 and DeFi. Also, yes, the others is less MEV, timely liquidations, as well as auto arbitrage and new revenue sources for the dApps and for the treasury, but node operators as well. So the node operators don't have to resort to like toxic behavior. So yeah, everything all in all, especially when we talk about no code, drag and drop, conditional logic builders or AI to help you craft your strategies. This should make it a lot easier for folks to engage in Supra. And then you kind of create your strategy, you let it run. And it's constantly consuming a little bit of gas off the, and these are like actually triggered by on-chain transactions when these automation tasks execute. So I do think it'll grow. And in fact, I think it's probably going to become our major product, like the most popular product at Supra. But this thing is only very compelling when you have a high throughput layer one, first of all, with access to Oracle data, which means you have more triggers and conditions to have your logic built upon. And then also, as you mentioned, that we are rolling out the cross-chain communication protocol. And so we can start to do things in a cross-chain setting. So cross-chain automation, rebalancing pools across different liquidity pools on different chains. Another one is really interesting is like using AI to help you craft yield opportunities. So compounding yield strategies that may exist in other chains and to automate. This is a little bit out there but imagine if you could automate these strategies and move your liquidity from one chain ecosystem to another when these opportunities arise. So I think it's going to open up a lot of new things. I think it's going to make DeFi more accessible to the average person. It also give them a lot of empowerment. They can do things that, oh, I have this idea, this strategy. I think it'll work. I want to try it out. Oh, I don't know how to program that. Talks to chat. It sets it up for you, verifies this is what you want to do. You deploy and let it run. So these are like, yeah, once again, you were considering calling this deterministic intelligence instead of artificial intelligence because there is some intelligence in that. These bots, they are running on very conditional conditions and inputs. These are deterministic inputs, and they make the decisions in a very deterministic manner. However, it's possible that you could have a conditional logic or strategy that maybe you launch 4 of them at the same time. And at a certain checkpoint, the logic is that you check to see which strategy made the most, and then you cancel the others and put all the liquidity back into the winning strategy. So that's adding some feedback loops and some more intelligence to this. And we're debating with that, but basically these are on-chain bots that execute sub-second, a couple times per second. And we might be calling this deterministic intelligence.
I love that. A whole new term coined here, folks, deterministic intelligence. All right, Josh, I know that you have another meeting to get to, so I'm going to wrap it up right here. You've brought up so much here. The big one here is AI-driven trading, deterministic intelligence, the automation behind so much of these DeFi opportunities. Any final comments for the audience watching right now after introducing truly a DeFi revolution?
Yeah, yeah. Super is here for the long run. We want to build something that is actually good for the world and is value additive, creating value for others. And once again, the combinatoric, so layer one, high throughput, low latency, fast layer one smart contract platform, access to Oracle data, very fast as well, finalizing our Oracle data on 600 to 900 milliseconds. For just to be clear, that's finality, not the rate at which we produce the data. The data is actually being produced in a flow. It's never stopping, but we have to run some rounds of the protocol. We can complete that by communicating with the outside world, running of the protocol in around 600 milliseconds. So it's very fresh and is native to the Supra's chain. And the idea is that DeFi protocols don't have to worry about Oracle data landing because we prioritize it. That's where we're going for, so that it always lands. And then with automation and in a cross-chain setting, there's going to be a lot of new things that developers can do on Supra that you literally will not be able to do elsewhere. And I think I'm just really looking forward to seeing what you guys build. And then also that you guys create a lot of value and have sustainable businesses and revenue streams so you can continue to service your end consumers and that end consumers can be happy with better execution quality. And we think that in the end, it's very fundamental. Better execution quality in a high throughput low latency chain is going to win. It's very clear. So auto arbitrage, auto liquidations, MEV resistance will over time equal better execution. And people are going to get tired of being fleeced constantly. So we think that in the long run, Supra DeFi is going to be remarkable and people find a lot of value with us.
No two ways about the fact that Supra is going to be extraordinary. Folks, Joshua Tobkin, the CEO and co-founder of Supra. Josh, thank you so much for your time. Thank you for this whole rundown of the coming DeFi revolution. Can't wait to chat to you again soon.
You too. Thanks a lot, James. Anytime.
Take care. Bye-bye, man.